Hey everyone, this is Simply Put on Business Insider and I'm Sri Ramaya. We're talking about the regulations that are incoming for algo trading. Basically, someone at SEBI was feeling like Neo, the character played by Keanu Reeves in the popular Matrix trilogy, when they decided to write this discussion paper on controlling trading using algorithms or bots when it happens in India. But as Morpheus pointed out, fate was not without its irony. In the Matrix, the bots led by Agent Smith, the cool guy with shades, the really evil one, was trying to control the breakaway humans led by Morpheus and Neo. And here in India in 2021, SEBI, the market regulator, is trying to control breakaway bots and bring them under regulation. Not just the bots, the humans using them as well. And here is where the irony gets multiplied, because both the bots in the Matrix and the humans at SEBI are going just as hard at each other instead of realizing that coexistence is really the only choice. The problem is bad traders, rogue traders, they've always been around and they're going to be around. The only problem is once they get the power of the machine, the algorithm, they can cause much bigger damage at a much faster pace and hurt a lot of people, especially small investors along the way. So therefore the SEBI, the market regulator, is right in worrying about it, worrying about the bots, worrying about the traders, the small investors. But the question that everyone's asking is that yes, you may be right in wanting to check and approve every algorithm that is in place, every strategy. If you want to do it, good for you. But the question is, who should do it? Should it be the brokers and the stock exchanges, or should it be somebody like SEBI itself? Now, even the developers, the guys who build these bots, write these programs and these unique codes, that are capable of making a lot of money in the market, they will say that this is a unique strategy. This is something that I have invented literally, and I have written this code, and it is worth a lot of money because of what it can do in the market. Therefore, I'm not going to show it to some broker, a platform or a stock exchange and let out my secret. Think of it like, drug makers, people who invent new molecules and ingredients to cure new diseases. What do? They go to the patent office, get a patent for their product, because it's a government assuring that their secrecy remains protected and they have that intellectual property is protected. That's an argument that a lot of developers might also have. And we live in the age of AI, artificial intelligence. The code can be written in such a way that the algos can learn from the past trends, mistakes, and or even successful trades, etc., and improve themselves. The code can be written in a way, which is called machine learning, where the program improves itself. And when that happens automatically, somebody else is not rewriting the code, the program itself becomes a better version of itself. Then, is it a new program, and does it have to be sent for approval again to the stock exchanges via the brokers who will be responsible for it, and how many times can this happen? These are also questions that need answers. But what SEBI can do is keep a leash on the humans behind these bots, the developers of these algorithms. That is something that SEBI can keep track of. The way to think about this would be to say, think of how we use digital payments. There are a bunch of players like Paytm, like PhonePe, like MobiKwik, like anything else that you use. Because RBI has sort of approved these players, RBI also knows who are the people behind it. So if something goes wrong, they know who to catch. What can the brokers really do? To my mind, it seems like, yes, they can ask the traders using algorithms to provide KYC to show that the algorithm that they are using is of the approved variety. Maybe there is a licensing regime, where these algorithms are approved by a SEBI unit or a central body which says that, okay, these kind of algorithms are allowed. I know who's the person creating it, the company behind it. I know where to find them if something goes wrong. And then these broking platforms are asked only to use those kind of algorithms, and they can also be asked to provide, send alerts when they see some unusual activity that can only be caused by, high frequency trading. If there is a market manipulation, there are patterns that a lot of people use to find these things. Maybe the broking platforms can become the eyes and ears and an alert system and support SEBI in trying to keep an eye on the algos. But do they really want to become the approver and be responsible for algorithms in any way more than what other banks and financial institutions are to the RBI. This debate is far from over. How much responsibility and who should take is a very interesting sort of paradigm that we are entering, with technology sort of invading the space at a very fast rate. It's a lot to learn, and it's something that we're all going to learn together. So be with us here on Simply Put. We will come back to you with more explanations and much simpler, jargon-free narrative that each one of you can consume, understand, and tell your friends. For now, this is all there is on Simply Put this week. This is Srinamayar signing off.